We think there are some big opportunities this week, so this might go a little longer than our usual updates. But this is what it takes to be successful. There are no shortcuts. There are no buy and sell signals that will change your life. You need data, confluence, and solid trading decisions to win in these markets. We're starting the Indices and Commodities update by first analyzing the MTF screeners. This helps us determine the most probable market direction and strength before we even consider a trade. Then we use confluent zones to see where trades might actually become available. It might be a little confusing at first, but watch until the end. We'll bring everything together and show exactly what setups we'll be watching. Let's start with the screeners. Indices are looking weak across the board. VBM is down on almost every time frame. We also have short-term continuation signals pointing down. VBSMI is down and hasn't even hit dynamic oversold yet. And the big one, the 1 month just crossed down from dynamic overbought. All of this together tells us there's a high probability bearish move forming. Extreme areas have warnings on short term, but not long term yet, meaning there could still be more downside before a major reversal. Gold has been the strongest asset, but is it too extended? Up VBM on the 4H, multiple short term and long term continuation signals. Up VBSMI up on almost all time frames. But here's the concern. Long term extreme area warnings and dynamic overbought on high time frames. That's a red flag. It doesn't mean shorting gold yet, but it does mean the trend might be nearing exhaustion. Oil is the least trending. It's in clear consolidation, short-term VBM down, but no continuation signals. Extreme warnings are low, meaning no immediate big moves are expected. VBSMI is mixed, short-term down, long-term up, but no dynamic regions. Now let's bring this all together and look at trade setups. Don't forget to take notes and screenshot for the week. SP500, with everything pointing bearish, will be using the orange boxes above for short entries and the blue boxes below as profit targets or quick scalp longs. Trying to go long for anything longer term here is risky unless volatility, momentum, and trend shift together across multiple time frames. Nasdaq, pretty much the same as SP500. Levels above are good to look for short confirmations, if everything. Lines up still, and below is used for profits or long scalps. Anything can change though, so check your screeners and tools as price reaches these levels. Gold, this is still bullish, but overextended. A pullback to our zones would be ideal to shake out buyers, trap some sellers, and set up the next move. Shorting highs and strong trends is dangerous. It's the opposite of catching a falling knife. The trend is your friend for now, but be cautious. Oil, when a market is consolidating, reversal trades are more successful because price stays within a range. But timeframes matter. It can trend on the 1 hour while consolidate on the 1 day. The right tools help confirm reversals. Statistical price bands have contained price well on the 4H, so if we see a confluence zone plus indicator signals, we'll look for a reversal entry. That's the full breakdown. If you don't have access to the tools we used in this analysis, now's the time. 5% off plus 7-day money-back guarantee. Try it risk-free today, follow for more updates, and let us know in the comments which assets you're watching this week. If you want specific assets analyzed by the QTX team, let us know too. This is for educational purposes only, not financial advice. Trade at your own risk.